Welcome back to Morning Trade Live. Let's keep talking cloud companies. This is PubMatic, the advertising cloud infrastructure platform that reported earnings on Monday, rallied big, held onto it, now at one-year highs after a multi-year slog. It looks like it's comeback time in the stock. Rajeev Goel joins as CEO at PubMatic, ticker PUBM. Rajeev, thanks for coming back to the show.
Hey, Oliver, great to be with you again.
Appreciate that. Market's loving your guys' report. You beat the expectations on earnings. You also seem to have a lot of confidence in the outlook. Tell us about where that's coming from right now.
Yeah, absolutely. So we printed, I think, a great quarter, revenue up 14% year over year, significantly ahead of guidance, just under 85 million in revenue against guidance of 76 to 80 million for fourth quarter, 46% adjusted EBITDA margin, and then we generated the highest quarterly and full year cash flow, free cash flow in the company's history. So obviously we're I think, turning the corner here. And what we said for 2024 is that we see a significantly more constructive ad spend environment. So my view in talking to advertisers and agencies is that the ad market has stabilized significantly compared to the prior 18 months where we saw, due to interest rate hikes and slowdown with the consumer, slowdown in the economy in general, we'd seen ad spend growth start to tail off. But I think we've turned the corner there. And so what we've said for 2024 is that we're going to grow at least 10%. So we view that as a floor. We're going to expand our margins. And then we've also added $100 million in additional share repurchase.
Okay. Confidence with the cash flow, it seems like connected to the buyback. Where are you wringing out the margin there to boost those cash flows?
Yeah, so there's two key areas that we're focused on in order to drive efficiency in our business. And efficiency is a big thing that we had to focus on in 22 and 23 coming off of pandemic investments. So the two key areas are, number one, applying generative AI technologies into our software development and release process. So almost half of our company is engineers. So it's a very significant part of our employee base. And based on a bunch of things that we rolled out last year, we're using generative AI to automate the software development process, to automate the software testing process, and also to speed up the software release process. So we think we're going to get 15 to 20% productivity gains. The second big area is around our infrastructure. So we own ad servers, tens of thousands of ad servers in data centers around the world, where we process over 500 billion ad impressions. And by owning that infrastructure, rather than paying the hefty prices and the margins that the public cloud providers have, we're able to save significant amounts of money. And so we're going to continue to drive efficiency. Last year, we drove our cost of revenue for processing ad impressions down by about 8%. And we aim to do something similar in 2024.
When you integrate AI, generative AI, does it reduce the need for human capital? Are your programmers having to just learn how to give inputs and prompts to AI, or will you actually be able to lay people off and just replace it with tech?
Yeah, so what we're focused on is actually shipping more features and more capabilities as a result of generative AI. So last year, for instance, we increased the number of software releases by 60% over 2022. So very significant, with maybe about a 10% increase in the engineering headcount. So with generative AI, we're doing things like by automating the software testing, we've reduced the number of software testers that we're hiring, and instead we've put that money into hiring more feature developers, right? Building more capabilities for our customers. And so when we do that, because of the margin profile, the very profitable business that we have, both in terms of reported profits and free cash flow, we're able to accelerate revenue growth by bringing in more customers, upselling existing customers, acquiring new customers. So that creates a great flywheel for us. More innovation, more customer-driven growth, more revenue, more profit, and then put that back into innovation, as well as, of course, returning capital to shareholders.
I'm by no means an expert or particularly knowledgeable about advertising cloud businesses and the inner workings, but can you give some details to help us understand what's different about the products now with generative AI versus what you were offering before?
Yeah, so the generative AI approach applies to really all of the products that we build. I heard your prior guest were talking about Snowflake, and he made a comment about machine learning and AI is not something new. Generative AI is just a text or image interface. So we've been long practitioners of machine learning, maybe over a decade-long set of experience there, where we use machine learning to really optimize the transactions on our platforms. And this is really important because the purpose for us to exist is to drive more revenue and more profitability for publishers or content creators who are selling ad space. And you and I'm sure both like to see a lot of free content on the internet, right? Whether it's news, entertainment, sports, weather, what have you. And what drives that free content is the profitability of those content creators or publishers. And so we exist and we apply machine learning to optimize those transactions, drive the yield up, find more relevant advertisers for consumers. And that creates, I think, a great benefit to consumers, particularly in an open democratic society.
Okay. Some of your client list includes some of the giants, Alphabet, Disney. Who or what do you see as being the kind of biggest reversal in the advertising demand? Can you give us an idea where that's coming from? As you mentioned, it's a different environment than 18 months ago, kind of this post-COVID slowdown. What rev the engines back up from the client standpoint of your customers?
Yeah, two of the areas that we're really excited about and where we see a lot of growth coming in 2024 are connected TV and retail media. So connected TV is, streaming, of course, on TVs, on your wall, on your iPad, on your phone. So companies like Paramount, for instance, or Max. And so consumers have shifted consumption towards streaming TV over the last couple of years, in part driven by the pandemic, but the ad dollars have not caught up. And so the ad dollars now are very rapidly moving out of linear TV, and you've seen that. You've seen the traditional networks report, TV networks report pretty dismal earnings, and instead the money is moving into streaming, and that opens up a lot more content, opens up TV-like advertising experiences for tens of thousands of advertisers compared to what you see on traditional TV, and so that's a real growth area. And then the second is this really interesting category of retail media. And so this is retailers. So think about Amazon, Walmart, Macy's, so on and so forth, Sam's Club. They're jumping into the advertising space. And what they're doing is they're taking all of the data that they have on consumers, what you're shopping, what types of products you're interested in, and leveraging that to deliver relevant ads to the consumer as they're shopping. So that's about a $25 billion category. We have a number of new customers in that area and new products that are helping us grow faster.
Fascinating. Okay, so it seems like companies realizing that maybe they can have a separate avenue of revenue and sales beyond just their products by selling the data, which I guess has kind of been your expectation all along, that ultimately people would figure out how to monetize the information they've got.
Yeah, that's exactly right. If you look at Amazon, which really pioneered the category, sure, they make more profit from advertising than they do on all of their retail business, right? So all of the stuff that they sell, which of course is about a 25-ish year old business, maybe 30 years, it's a huge business, but they make more profit through the much smaller advertising business just because of the profit margins in that business. So a lot of retailers are seeing that and they're saying, hey, we want a piece of that pie. It's about a $25 billion category in terms of media spend this year. So I think a really terrific opportunity for us.
Okay. Rajeev, thanks for the details. Sounds like exciting stuff. We'll be definitely continue to keep a close eye on the stock. Good to catch up.
See you again soon. Thanks, Oliver.
All right, sure thing. Rajeev Goel, CEO at PubMatic.